How you doing, everybody? I guess this is my stock 301 video, and here we are. After the 201 video, I told folks that were stock heavy that they needed to start selling covered calls to raise cash to put aside for the ultimate bottom of the bear market. I hope you did that. But there's also the other side of the coin that I want to talk about today, which is people that are cash heavy. Because right now, we're in a position where you could very well end up in the same position as the people I talked about in the 201 video that ended up with stock at a 10% discount that will ultimately be way too expensive. Things like Boeing at 250 that are now Boeing's at 120. People that were buying Tesla at 600 where it's now 450. What you're going to see here coming up soon is a bear market rally. And if you're cash heavy, you're going to watch every day the market going up and you're going to say, wow, if I was invested, I'm losing thousands of dollars I could have had. And ultimately, you will invest right at that same point where they invested for the same reason. And the reason is because your allocation of stock and cash was out of whack and you have fear of missing out. Their fear of missing out was the stock tanked and they want to get their money back by investing while the stocks were low. Your problem is the stocks are going up and you don't want it to get away from you. So just about the time the bear market rally's over, you can't stand it anymore. You invest at that same 10% discount and then the bear market continues and your advantage of having all that cash is completely wiped away and you're in the same situation everybody else is in, and I want to help you avoid that. And the way you avoid that at this point is that when the stock market drops as quickly as it has, the volatility index rises proportionately. The volatility index is at the highest point in the history of the stock market. And what that means is that your opportunity to sell volatility has never been better in the entire history of the stock market. So, if you're stock heavy, you certainly should continue to sell those covered calls. You could sell a $700 call on Tesla, which is a $450 stock, and still get a couple $100. Now, I'm cash heavy, but I still need to participate. And what I'm really making this video for here is a guy like Danny, who's cash heavy, but not participating. When the implied volatility is at 84, stocks like Tesla, the implied volatility on Tesla is 200. Tesla's been cut in half from 900 to 450. You can go out a few weeks and offer to buy Tesla at $170. I sold a $1,400 call to do that. Now, if you do the math, that's a 100% rate of return for offering to buy a stock that has dropped in half, if it drops that in half again, and loses 12% on top of that. That's just absurd. That's why you want to wait, number one, in these big bear market beginnings, is you want to make your entrance in with put options at the high volatility, at low ball prices far below what people bought, Boeing at 250 and Tesla at 6.5, whatever. You want to participate, but you want to participate at much lower price. Now, most likely, you're not going to get the stock. You're just going to keep stacking up cash. So you want to roll these things out. And what I mean is you want to have an option for this Friday, next Friday, the Friday after that, and every week when they roll in, sell one 3 weeks out. So every week you have a 3-week-old option expiring worthless, and then you sell another one. And then just keep stacking up the money. And you change those prices, and your strike price should be in relation to how you need to rebalance your portfolio. If you're 100% cash, it's okay to end up owning some stock because you're going to see a bear market rally and you can sell it for a nice profit. If you have a little bit of stock, you might want to sell them way low ball below the money. My Tesla stocks, as I said, are 170 and 200. It's a $400 stock today. I have $1,420 Amazon puts It's 1,700 or something like that. But here's another reason why you don't jump in right away on things like airlines and cruise ships and all this ridiculous nonsense that all these kids on YouTube are telling you to buy. Do you think you're going to be better off a year from now buying companies that are bankrupt because you believe that the same companies that hire as many lawyers as they can find to pay as little tax as possible by following the law are not going to utilize the bankruptcy laws to their advantage when the time comes? You're out of your mind, okay? Bankruptcy doesn't mean you have no money. It means you have more bills than you have revenue. And what you're relying on is not that these companies are not bankrupt. They will be bankrupt. You're relying that they don't file for bankruptcy so they can make millions of dollars and your stock goes to zero. That's one option. You could have that option. You could believe that. And most kids on YouTube are investing in those stocks. Well, here's another option. Now that we've had a couple of months of this problem, we can look at the facts around us. How's this for a fact? One of the best companies that was at $2,200 is hiring 100,000 employees because business has never been booming so much, which is Amazon. Do you think a year from now, do you think next quarter, when Amazon reports the best earnings in the history of the company and their stock is down $500, you're going to make more money owning a pile of cruise ship and airline junk? Or you're going to be happy you sold some, a little bit under the money Amazon puts, collected the cash, or got the stock? That's the other reason you don't jump in at the beginning of a bear market. You have no idea what's going to work, what's not going to work. It should be fairly obvious to everybody out there now that buying airlines and cruise ships was a big mistake, as opposed to investing in the company that's hiring 100,000 people because they can't keep up with the demand for business. Okay, so today's 301 lesson is mostly about the VIX. I'm not selling puts on Tesla because I want to own Tesla or I care about Tesla. I'm selling puts on Tesla because the implied volatility on Tesla is 200%. 200%. It's normally like 80 on a crazy stock like that. It'd be 40 normally on Amazon or Google. Amazon is at 100% volatility, because the VIX index is about 80 now, dropped from the all-time high. So you can get an incredible premium out of the company who's hiring 100,000 people. This is a once-in-a-lifetime opportunity. Buying junk companies that are in bankruptcy is not a once-in-a-lifetime opportunity, nor is it a good risk-reward scenario. Using the high volatility index in order to sell below market value contracts on a company hiring 100,000 people is a good deal. It is a smart thing to do. The risk reward is very, very high because it's been dragged down by the whole market. The risk is almost zero. The risk reward scenario you're taking on buying junk is you are going to get screwed. Okay? So keep in mind, for next bear market, 10 years from now, that you don't jump in, you wait for the VIX to go up, then you start selling lowball puts, covered calls, whatever you do, depending on whether you're cash rich or stock rich. Right now, I want to see you, Danny, selling some puts at this maximum value and maybe even end up owning some stock so you don't get tempted to go all in with the cash just because there's a bear market rally. When I say you should be 80% in stock and 20% in cash at the top of a bull market, that's because I don't want people to get screwed by buying the bear market rally. If you own some stock, you will be much less tempted to buy more of it just because the market is going up. If you sell puts and make pretty good money, as I said, you can make 50% per year. If you sell a little bit above the money, the crazy lowball puts I'm selling, you can make 80% per year rate of return by selling puts right now. This won't last forever, but take advantage of it while it lasts. So that's the 301 video, is understanding the VIX, understanding that these opportunities magnify themselves. The opportunity to buy cheap stock is magnified by the fact that you can sell a put option for maximum premium well below the price of the stock. So that's what I want you folks to do that are cash heavy. If you're stock heavy, take advantage of the premium by selling covered calls. Sell way ridiculous above the money covered calls. At least you're raising a little bit of cash. And I'm also pointing out that you want to expect a bear market rally, and don't get all hot and heavy by using up the cash you have because you're afraid the market will get away from you. I want to warn you, instead of telling you what you shouldn't have done, like in the last video, I want to try to say what you should be doing and warn you of what's to come in this video. But mostly this is a lesson on the VIX and on why you wait for the stocks to go down, the VIX to go up, then you want to strike while the iron's hot. Okay, so I hope I explained that all. Please, if you have any questions in the comment section, feel free to ask. But while these companies individually, like Tesla, are at a 200% implied volatility, Amazon hiring 100,000 employees, the premium has never been better to put lowball offers in to buy it. This is what you do in these kind of markets where the mathematics is to your advantage and the risk is very low and the reward is very high, even in a market that's crumbling all around you. And it's not because I'm smarter than everybody else. It's just that I've been through 2 of these already and learned these things in the past. So there you go. Don't want to waste up too much of your time. Have a nice day. Enjoy yourself. And remember, this will all be over. It's not going to be the end of the world. And I don't want to make fear porn videos. But my estimation is that this is the same kind of bear market we always see. And ultimately, it will be down more than 60% at some point after we see a bear market rally that I expect to come up within a month or so. Anyway, have a nice day. Thanks for watching my videos, guys. And please share and try to get people to subscribe. And once again, look out at this horizon. What do you see? You don't see the houses being built up. You see an economic shutdown right off of my balcony. And you're probably going to see it everywhere you look all around the world for some time to come. So be careful. Bye-bye. Thanks again, folks.